Welcome back to Primary Source China Investment. This week we're on show L5, and we're going to be talking a little bit about these China military stocks. We got some questions this week in the YouTube channel and via email about foreigners selling Chinese stocks and if it was related to the new list highlighted by the House Select Committee on China's Communist Party. We went through these names, and we won't bury the lead. About half of the names that are targeted are in the CSI 300, and it represents about 7% of the total. Anybody familiar with the show can recognize a few of these names. ZTE is a big one. China Mobile is a big one. Some of these construction companies, the railway construction company, these are all now highlighted by the Select Committee, and now we're seeing the Select Committee pushing back on index providers and on product providers. There are two competing narratives, and both are true. Locals on the mainland and Hong Kong are buying the CSI 300, and foreigners are selling them. So we need to evaluate where we're going with this. And Peng Guo, based on this list, did you see anything that jumped out at you, any risks, or any other things that want to bring to listeners' attention?
I think military-related companies and the sectors, we do track this area. It's definitely a good sector and they get a much better performance in the downside of the economy. Especially right now, as we all know, the political risk is extremely high, and most of the insurance companies they cannot provide any political insurance anymore. So military sectors looks like a good way to hedge the risk of the political risk, and especially in the recent what they call the competition. It's really like spurred this areas to growth, and also their own development, like they change it to the new fighter jet and the new carrier, and also can bring a lot of the related supply chain in those areas. So if you see most of the recent, we see the market get down, but the military sectors is in good positions in the defensive area. So in the next round, probably it would be the pioneer to bounce back.
So I want to focus on the index itself and some of these names that are in the index, because like you said, it may be a good sector to invest in, but you're going to get a lot of pressure. I mean, BlackRock and State Street, they're going to get a lot of pressure. So are the index providers like MSCI, FTSE, Dow Jones. They're going to get a lot of pressure to pull these names out of the index. So let's talk about the CSI 300. It's the most quoted index on the mainland. And I can tell you, the CSI, the index company, is not going to be removing these names from the index. And while half of these are in the CSI 300, the remaining half are most definitely in the CSI 500. Recall the 300 is the top 300 names and then the next 500. Product issuers, like we said, BlackRock, State Street, DWS are going to have to issue disclaimers or new products. Compound this issue is that CSI is the most tracked index on the mainland, and there are foreign asset managers that have such products. Finally, if anyone believes that the largest banks on the mainland, and this is to your point, Peng Guo, all of the largest banks are state-owned, and if you don't think they're doing business with the military, you're either avoiding reality or you can't see where the puck is going. The business of the military is the business of the party. This is going to require more, not less, focus on your China allocation. What's your thoughts, Peng Guo?
Firstly, from an investor perspective, we really try to minimize the impact of the political opinion. So whatever political, they change quickly, unstable, and could manipulate by the small teams. And also, as long as from investor perspective, is that investable universe or not in the investable universe? If that in the universe, so we can take a look. And I know like some of the index, they remove the military companies or whatever from the index. It's more like the customized or based on whatever the political reasons to remove them. That's fine. They want to do it. That nobody can stop them. But that's the really military area really represent the growth in the future. So now I think probably people put the bad tag to the military area. But the China military area, think about it, it could be the major force for the peace maintenance. Without those areas, it's easily to lose the balance for the global. And also in the long run, all those technologies, like the engine technologies, is not just for the military. So those kind of things and also can bring the positive benefit for the human beings. And also some breakthrough of the technology as well as it could be copied, followed by other countries. So it's hard to see the technology is bad or is good. But also technology is a technology. It really depends on the who use it and how to use it.
That's exactly what I'm saying. Broadly defined, the military is everywhere. I mean, these companies that have some military contracts or these companies that have some funding from domestic banks, all of it can be considered military. So my point is, if I'm looking 18 months down the road, what is a foreign investor looking at China going to do? They have to get a little bit more active because CSI is not going to change their index because some politicians in the US don't want US investors investing in China tech or China military. So you're going to have two sets of indices. You're going to have a lot more confusion. And it's already confusing how to invest in China. There's already a product that's out there, which is China XSOE, with China without state-owned enterprises. That's CXSE. And I've got news for you. It underperforms the CSI 300. So what are you forcing investors to do? You may be forcing investors to take a worse risk-adjusted return. But there's so much to cover here, and we're going to try to get out of here in less than 9 minutes. So we're going to leave it there, but tune in, and we're going to obviously talk about this more. Thank you.
Thank you.